Good morning, everyone. Welcome to another trading view update. We have seen markets trading sideways with a slight hint of bearishness as the week begins. Lots of developments in the tradfi markets where oil has opened 20% higher could result in a pretty bearish tone over the course of today at the very least, if not further into the week as well. But let's see where the kind of key levels are that we need to keep an eye on and that we'd like to see hold. First for Bitcoin, pretty clear here that the 0.382 fib extent of fib retracement between the move between the 24th of February and the 2nd of March, acting as a pretty key level of support here, so at 38,225. If this level fails to hold, we're looking at 36,690, followed by 34,343. So these kind of three lines, definite areas of support. We on the VPVR, we've seen pretty key trading activities. Essentially, let's have a look for the year so far. We can see the two kind of main areas of trading have been in and around this level, followed by that level that we couldn't break through last week. So between here, expect us to continue to see choppy prices. If we do start to break to the downside, a revisit of the low 30s price level, price action that we saw back in at the end of January, not unlikely. I would say at this point, just a quick look towards the equity futures. We can see how Bitcoin and Ethereum both now highly correlated again with the main tradfi markets. We can see for Bitcoin 0.69, Russell 2000 0.62, S&P 0.69. We've even flipped negative on the correlation to the US dollar. US dollar finding a lot of strength in this market, also pushing higher up towards 100. And tradfi markets, so looking at futures, Nasdaq, S&P 500, continuing the downward trend that we have seen since November of last year. Looking at Ethereum and the tradfi markets, again, it's even more sensitive, both to Nasdaq, S&P, etc., but also much more negatively correlated to the US dollar. So we'll continue to see ETH underperforming the rest of we're underperforming Bitcoin at the very least, as we continue to see weakness in the equity markets. Here for Ethereum, the kind of key support that had been in play, I'll have to draw this out quickly. So this is essentially what we were looking at here. Same sort of fib levels, but we can see that ETH has already dropped below this 0.382, which would be acting as key support. We're now looking at 2,500 as that real last level of support before we'll likely see a revisit of 2,300. Again, why is this target so important? If we look at the short-term impulsive move, and we've seen a complete reversal here in price action. If we take this, we can see that 1.618 extension level also coming in, basically in line with the bottom of the prices of the 24th of Feb. So likely to, because we're failing to hold the support, if we fail to hold 2,500, then a move down to 2,292 is most certainly on the cards. Now, it is important to remember in these markets that sentiment can flip bullish, bearish very quickly. Everyone was super bearish when on the day that Russia invaded Ukraine. Following 2, 3 to 4 days, we moved much higher, and everyone's saying war is good for crypto. And it's just try to keep an eye on the levels of support when making your decisions. We will continue to look at the 2,500 as key support, and we'll then look to see what happens when prices are trading at 2,300. Should they actually drop that low? Where the next potential move is. Funding rates, I wanted to look at for ETH very quickly, slightly negative, but nothing too crazy. Looks to be the case that market participants are using futures, perp swaps to hedge any longs that they have. There's not much selling actually going on. If we look at the volumes, they've been declining steadily for the month of March so far. So this lack of activity just implies there's not actually many market participants in the market looking to sell ETH aggressively at this moment in time. That's it from us. Have a good trading day.